see that our participants are rolling in, so I'm going to get started with some housekeeping items. Welcome, everyone. Today's Lunch and Learn is about the end to end digital mortgage, debunking myths and unlocking real opportunities to improve profit margins and the consumer experience. You can submit questions at any time by using the Q&A icon at the bottom of your screen. And Housing Wire will be recording today's Lunch and Learn and we'll send it out. Now, for today's conversation about digital mortgage, we have Paul Doman, the president and CEO of Accurate Group, Carolyn Gorman, the senior vice president, mortgage director at Huntington Bank, and Jay Plum, executive vice president, mortgage and home equity lending at Fifth Third Bank. How are y'all doing today?
Doing well. Thanks for having us, Allison.
I am excited to jump in, and I know that we have a lot to talk about. So I'm going to bring us to the first question. What are some of the factors that are driving the need for greater digitization today? Carolyn, let's start with you.
Well, thanks. And thanks for having me. It's a pleasure to be here today with you all. Really looking forward to the conversation. I'm sure we'll hear a lot of factors that are driving the need for digitization. But I would tell you, I think first and foremost, we're in a people business. We're absolutely working with people, and we're trying to use digital technology to help people because people are used to using digital technology for so many other aspects of their lives now. We've really become accustomed to it. We're looking for simplicity and ease of use in the mortgage business generally, and digital tools are how we've gotten simplicity and ease of use in a lot of other areas of our life. So I think there's a natural drive where people would really find it helpful and intuitive. And so really the people first business and driving toward those tools is a big driver. Certainly, I think there's also an attraction to trying to find cost savings in that simplicity. So, theoretically, when we simplify our processes and we take steps out of processes and make them easier to use, they're also faster and potentially less expensive to administer. I think the confluence of all those factors together is really pushing us in this direction.
I think that makes a ton of sense. I think creating a better consumer experience is at the forefront of everyone's mind, and that is the people side of the equation. I think from our perspective as a supplier to mortgage lenders, we also think about how to create efficiencies using digitization, and there's a variety of ways to do that. So happy to talk about a few of those things as we move forward.
Uh, Jay Plum again. Thanks for having me today, and I'm glad to be here. Obviously, one of the key needs for digitization is cost savings, and I agree with everything that Paul and Carolyn said. As you can tell, here at Fifth Third, we could have used the cost savings to get better lighting, but I like this kind of spooky look for me anyway. Uh, but when you think about digitization and all the complexities of some of these products, it's really keeping the customer in the forefront of everything that we do and making sure that whatever we add adds real value to their experience. And then the cost save opportunity, when we are having so many challenges with volume and all the other factors of profitability, just makes sense as a good business practice to think of new ways of doing things and to make things a little easier so that we can funnel cost to the value add functions that a customer might appreciate.
Going a little deeper on that, I feel like each of you mentioned the customer experience and also touched on some economic factors. Considering both the customer experience and the economic realities of digitization, are both important, or is there one factor that's primarily driving the need for digitization?
Are there any people from my finance department on the line? Because I know how they would answer. I think they're equally important, but right now, as we're all under pressure for volume, and it's a very different situation than just even a year ago, let alone 2 years ago, in terms of overall margin and profitability per loan. The ability to save costs by putting in some tool that allows you to become more efficient really is an important activity that has to be prioritized. Uh, the problem in many organizations is that the same subject matter experts are engaged with each project, so it's hard to make stair step change. But it really is necessary when you have margins decline as much as they have, or volume declined as much as it has. And you can't ignore those economic factors.
I'd agree they're both really important, maybe equally weighted for all the reasons Jay mentioned. But that customer experience is so critical in a time where really everyone wants to differentiate themselves. And showing how you can really add the most value for a customer at a time when affordability is a big concern, maybe passing some of the cost savings along to them is an option at some point, and really providing customers that value of what they need in a time when they're navigating one of the most difficult real estate markets that they've been faced with. If we can be there with better advice, better guidance, better experiences, better processes, that's really paramount for everyone.
I think from our perspective, we see lenders taking steps to differentiate themselves, Carolyn, just like you mentioned. And, those that have created a better borrower experience are able to capture more deals just based on that experience. And so, we see that differentiation amongst different lenders throughout the country. And those that really focus on the experience that the consumer has, whether that be streamlining the closing process by digitizing the closings, using remote online notarization, those that are making the valuation process easier by implementing the GSE modernization tools, those things do save some dollars, but more importantly, they create a borrower experience that is completely, a differentiator. And I think that's a valuable thing for everybody.
I think that's a great comment, and I would add that with the pandemic, customer expectations have certainly changed, and that's really changed around the priorities for us as leaders trying to deliver a customer-centric experience. Uh, when I happened to be at another organization, I was getting a lot of pressure to go to a full digital closing experience. And at the time, prior to the pandemic, uh, it really wasn't a priority for customers. But necessity being the mother of invention, when nobody wanted to get together with anyone uh, or wanted to meet with them 20 feet away, it was very difficult to hold a pen and a document in the same space with a title company. So we ended up going to a digital closing. That experience has stuck around because it's a better experience. The fact that the pandemic got us there because we had to do that, is it is what it is. But the overall experience for the customer is a much better one, much more efficient, much more customer friendly. It's the right thing to do. Uh, but uh, making sure that we're implementing things that the customer wants, not just because the digitization is neat or somehow looks good, is really the key part of the prioritization process of all the projects that are available to us.
So, Jay, you just mentioned implementing things that the customer wants. Can you give us an example of success that you would give another lender as a reason for adopting digital technology?
Sure, I think a lot of us assume that we should have a online application. Uh, we did not have that up and running until recently. We didn't promote it. We just finally made it available behind 53.com. And within the space of just a few days, we had several hundred applications. Now, the fact that we didn't promote it is what surprised us, that the demand from the customer was there. They enjoyed the experience, they wanted the experience, and it was just proving out the value of having that tool available. And there are more items like that. As we think about some of the opportunities with the GSEs on day one certainty and AIM and all the other opportunities that the GSEs are making available as part of their digitization experience, it does speed things up. So customers are feeling more confident that we can meet close dates and can live to the terms of the contracts that they're signing. Because when it comes down to the purchase environment that we live in now, delays are problems because they might lose that house that they finally got a chance to bid on, finally got the bid accepted. Last thing they want to hear is, oh, it's going to take us long and we're going to miss your contract date. Disaster. Speeding everything up adds tremendous value.
Carolyn, I would love to get your take on a success that you would give to another lender as a
Mm.
reason for adopting digital technology.
Absolutely. I think the next level, kind of the next success really, because that having that online application, having the access to be able to use a digital tool to apply right away, I think it's a huge win. It's very similar, would cite that as a success. I'd say the next thing is communicating throughout that loan process, right? Like Jay said, it's a lot of times it's a 30-day process. We've had some successes in pulling that forward so that many times we can do a loan closing in a couple of weeks, and certainly more and more and more of that is the goal. But part of what the customers are asking us for is better communication throughout that process. From the time they apply until the time they close, historically, without a good communication tool, that could be filled with friction. There could be documents that need to be provided multiple times, things lost in translation. The process of creating loan conditions and gathering loan conditions and communicating with the customer throughout is very onerous, very manual, and very unique for every situation. So where we can insert digital tools in there to help make that process work better, that's where we're seeing real wins. And there's still a lot of opportunity to improve and to do better in that space. But even tools for just some portions of income review, asset review, the day one certainty tools that Jay mentioned, it's really critical to be able to take information right away, do something with it right away, and communicate that back seamlessly. And so the more and more that we do that, the more we see the wins, not just in terms of speed and cutting time out of the process, but also of satisfaction, where customers feel more confident that they understand what's happening with their loan, and so they can really feel good about the process.
I think one of the ways we think about that, Carolyn, is in adding value is trying to make our interfaces into either point of sale systems or loan origination systems or even servicing systems more robust so that we as a provider can deliver better statuses that are more clear and more frequent. So you then can educate the consumer. That's something we're focused on as well.
I think that's absolutely critical, right? It's a great point. And making those integrations, two ways. So they're talking back and forth to one another and updating, real time, and doing that, some of that even without intervention of any colleagues that might be working in the process, can really add a ton of value.
I feel like we just heard three really positive takes about digitization. And I know that people get really excited when they hear about wins that other people have had. And I want to take this opportunity to take a step back and address potentially what could be holding people back. So, what myth or even misunderstanding about digital initiatives do you think is hindering adoption across the industry? And Paul, let's start with you.
Happy to start. I think I've got two. One very clearly is a misunderstanding that the workflow has to be the same for all consumers and all processes. I think technology today allows us to build processes that can drive different experiences based on a variety of factors, whether those be risk factors, whether it be the consumer's tolerance for a digital experience. But the myth essentially that has been around probably most of my career, and we've all wanted this, is that we have to have one defined process because we can't manage multiple different processes in the mortgage world. That no longer is the case with good technology. I think technology that allows you to drive some consumers down a digital process who want to be part of that digital process, that's entirely possible. And then for those consumers, which there are, that want nothing to do with the digital process, you need the ability to drive them down a different work stream or work path. And that's really what technology brings to the table today. And I think unbunking that myth would allow people to embrace this and move forward with it because it's not an all or nothing proposition. If you operate under the assumption that everything has to be fully digital, you're, I think, never going to get your arms around the project. So thinking about it incrementally and driving different workflow processes is one thing I would definitely say would help kind of debunk a myth on this. Um, the other piece is that, you know, in this time of low volume, nobody can focus on digital projects because we're worried about cost control. We're worried about personnel and are we staffed correctly. But to me, you know, there's a famous quote that said, you know, I think it was Noah's Ark, don't wait for it to start raining before you build your boat. And you don't need now with low volume, I think is the time to take advantage of trying to be aggressive with some projects because you've got time. And then when the volume comes back, you're only going to benefit from the better consumer experience and the efficiencies that you've created. So I think the other myth is low volume is not the time to do these things. I think it's a great time to do them.
I would say that Noah is exactly correct, and that as he prepares for a deluge, uh, you just have to get started, no matter what the project is. Even if it's small, the incremental help is good, and building organizational confidence that you can tackle a digitization project makes sense. Uh, if an organization is not doing something with the agency programs, that's the easiest place to start, of course. But there are so many things that people can get started on. I'd say that the big risks are that your subject matter experts are wearing so many hats already that it's a really very difficult jumping off point. Uh, Noah had a couple of friends who helped him with the design of the ark, and if it's just the same guy, it's going to take a little while to build that ark. Uh, and that is certainly a reason for concern, but not really a reason to never do it. It's just one of those constraints that we always have to manage around in lending land,
And you,
because the outcome at the end is worth it.
I think you can rely on uh, outsourced providers to help too, cover some of that, those folks that are spread so thin, particularly as it relates to the GSEs and this whole idea of modernizing appraisal. You know, we have so many lenders right now saying they want to wait and see how this goes. And it's the exactly wrong time to kind of wait and see. I think doing this now and moving forward on it when volume's low, you can really get some major benefits out of the new processes.
I think that's right. I also, the first myth that you talked about debunking, Paul, I really love that concept because we often think about only having one process for everything to go through. Often that's because our systems are designed around that. Right? We've designed processes and systems around having only one process historically. And now that we have some digital capabilities to be able to think about loans differently and to be able to create those different swim lanes and experiences and processes that you talked about, we really have to expand our thinking organizationally and across all of our systems and providers to say, okay, if we do something different, maybe upfront, or we have one piece of the process that's digital, how can we really think about all the downstream impacts throughout our entire process so that we can create those differentiated experiences and swim lanes in a way that we couldn't before? And that really requires us to think end to end, like the title, I think, of this webinar. When we make a front end change, what changes should we make in the middle or on the back end to fully capitalize on those impacts from the front? Because we're missing some of our efficiency and cost savings sometimes, and our ability to really leverage the full power of these investments when we make an upfront change, but then we don't change the process in the back. And so we really should be expanding our thinking and asking providers and service partners to help us through those changes.
I feel like each of you have mentioned how this is not something where there's one person in an organization who's waving a digital wand, who's saying, okay, this is what we're doing, and this is what the process looks like, and this is what's going to change. So I think at this point, it makes sense to talk about adoption. And what does adoption look like, and how difficult was it to get digital initiatives adopted internally?
I think it's based on the perceived value of the change being introduced. I think Paul is right about the distribution of customer experiences, where you're going to have some customers who don't want to hear the first thing about digitization or the uh, ability to present an application and process a loan without talking to uh, staff of some kind. But I think um, when you talk about digitization, for the most part, you have to talk about colleagues. You got to help them see the value proposition for both them and for the customer. And for them, uh, digitizing certain things means that colleagues don't have to do the boring non-value add stuff. Um, One example that I've used for a very long time is recognizing whether or not something's in a flood zone and using OCR to read that flood zone report. That has to be done. And that does imply a certain process based on reading that report. But having an individual do that really does not add a huge amount of value. It's There are only three options. So having the system do it means that you can go to automated queuing, get it teed up for somebody to either work on or not work on, rather than have somebody stare and compare at that piece of information. And then you can take the cost that you saved on that activity and put it where it really adds value, which is talking to the customer and telling them what they need if they actually are in a flood zone and explaining all the ins and outs of it. Those are the kinds of things that are a win for both customer and colleague, but that are part of the implementation process of any major systems change. Uh, it sounds really great to say that you have gone to automatic review of flood reports, but if you don't also build into your project plan what it means for the colleague and the customer that you did this and what you're going to do with your savings, you're kind of missing part of the key facts to create an adoption strategy. Um, I would say that some loan officers are not as enthusiastic about day one certainty and knowing that we get repurchase relief if we do certain aspects of the process the way that Fannie and Freddie would like us to. In those cases, I have in the past just pointed to the time savings on the overall flow of the loan and reinforce the idea that the time savings is worth the extra conversation of telling the customer why, if they uploaded the documents electronically and we were able to review them, it's worth the hassle of explaining that process. And you just got to put things in easy to understand terms, and folks will come around to it. It did take a while to get folks to buy off on some of the income verification pieces, but folks saw the value once they were familiar with the process. They might not buy off on the repurchase benefit, but they'll buy off on the process time save.
Yeah, when people see the why of what's really in it for them, that's really where you win with adoption. And so there has to be a why, and you have to understand and be able to communicate it to begin with. Right? What's the purpose for doing this? How does it help? And the other pushback sometimes we'll get is it's great when it works, right? But like all technology, what about when it doesn't? And so it's really working through making sure there's smooth rollouts and smooth launches of technology when they're implemented, and then working through feedback about how it works, how it doesn't work. What are the challenges? What are the objections as folks are using it? And then really incorporating them back into the process to say, okay, this, you got to start somewhere. We've talked a lot on this call about just beginning to move the dial. But having a real continuous improvement mindset around it so that those tools get better and better and people feel the impacts of the improvement over time. And you win more and more adoption that way. Part of our, part of it is a communication and support strategy, like you would have for any change management need. Sometimes the questions are, what if my login doesn't work? Or who can I call if I have a question about how it works? And sometimes the questions are, hey, this is supposed to do X for me, but it actually is returning an error message and it doesn't do that. But it's really having a listening approach and a feedback loop to correcting those things and try and drive more and more adoption just by winning hearts and minds of the feeling that it works and more interest in using it.
I completely agree, Carolyn. I think good implementation processes is a key to gaining adoption. And so many times technology is great, but it's not implemented well. So you immediately turn off the users. And that's a key is implementing correctly. I'd also say another big obstacle to implementation or adoption is sometimes within banks and mortgage lenders simply the risk. And risk is often used as a reason not to do something. And I think that is one of those myths that new digital processes sometimes can actually manage risk better than the old paper-based process or the old workflow. And helping lenders understand what the risks are of adopting new solutions is a key thing we focus on to grow adoption, because there are some risks in this business. There's no doubt, and really getting people comfortable in the risk groups to move forward is a key thing we focus on. And then there's this other myth, a couple other myths that we often see from our perspective is, the old myth that the consumer always ought to be brought into the branch, or the loan officer always ought to be dealing with the consumer in the mortgage context, because we can cross sell those consumers when we bring them into our branch, or when the loan officer is in front of them, we can offer them other solutions. Well, today's consumer really is objecting to that philosophy. And so when you look at the closing side of the transaction, allowing the consumer the flexibility to close when and where they want, using the technology they want, I think trumps this old myth or this old idea that we have to bring the consumer into the store. So I would share that with everyone as another way to think about it. And adoption sometimes is driven by consumers, and we got to keep the consumer in mind.
My next question is, Jay, Carolyn, I think I'm going to start with Paul, but I would love to hear all of your takes on, is there anything that you're working on or that have done that has moved the needle, or that you expect to move the needle, that you'd like to highlight as far as digitization is concerned?
So you're starting with me, Allison?
I'm starting with
All
you.
right.
I'm giving
So
Carolyn and Jay time to to prep their answers.
we've obviously been investing in kind of three core areas that we think has moved the needle, and we know has moved the needle for many lenders. I've mentioned multiple times already the GSE modernization process on the valuation side. It is really transforming the way valuations are done and changing the game for lenders who embrace it. So that's one thing I would cite. For those of you who are still kind of in wait and see mode, I would encourage you to take a look at it and move down that path. The second thing is obviously the whole digital closing world. A lot of folks still think that digital closings aren't possible, and we firmly have implemented digital closing processes that are seamless and have really improved the consumer experience in multiple cases. And then lastly, we see a clear opportunity for lenders who are still operating on legacy valuation management platforms to embrace modern valuation management software. And we've put our software into multiple shops these days and have provided real efficiencies, and really have seen some lenders reallocate resources to the tune of a quarter to $500,000 a year just in implementing some significantly more modern appraisal software and replacing their legacy platforms that they've been using for many years. So those are our three hot buttons that we know we've got real results on, and we're continuing to invest in more, but those would be the three where we have real results.
I'll go next. I I do think on the valuation side, there's a lot happening that are really creating some efficiencies, but I would probably highlight something that is not necessarily at the forefront there, and that's on some of the tools that are embedded in the appraisal management systems that Paul referenced that identify appraisal bias. Uh, the ability for software to find phrasing uh, that talks about something that gives you pause when you're looking at an appraisal. Uh, it it just gives you an extra level of comfort that you know you're doing the right thing for the customer, and that is really a pretty new tool, uh, and it's not completely ready for prime time. So one of the things that we noticed when we ran it was that the word Asian was highlighted on a particular appraisal. Well, it turns out it was related to a tree, an Asian pear tree. Uh, so it wasn't discriminatory, but I would rather look at that loan and understand what drove the use of that word than to not see that and not have the opportunity to identify a loan that might lead to a reconsideration of value. So those tools are performing uh, a real service in identifying ways to enhance experiences and to Paul's earlier point about risk. This really can help identify risks in a way that you can step back, think about what is in the appraisal, and decide whether or not you need to go further in the inspection process. Uh, some of the more interesting extensions of those appraisal tools also can compare subject properties in low to moderate income census tracts with very similar properties in higher tracts, higher value tracts, and see if there's valuation differences that you also want to take a look at. But the idea of raising the question, not necessarily answering the question, but raising the question, is really helpful for all those involved in the process. Uh, I'd say that's one thing that we are implementing now and learning a lot from. Uh, there are a variety of excellent projects we have that I can't talk about, but they will lead to millions and millions of opportunities. But I think they all involve the use of data. And I'd say that some of the more interesting things in digital land take data that we've always had available and uh, create different processing pathways based on understanding more about the customer at the point of sale. And then we change in response to that. Uh, that is a work in progress, but that could be a pretty big deal for both us and for customers because we know a lot about our customers. We often don't put that to use as early in the process as we should. That will change dramatically during the next couple of years.
Absolutely agree with that. And introducing it as early as possible in the process. I think we're going to see a lot on that front everywhere. I totally agree there. I would add something
You'll
else.
probably see more of that at Fifth Third than Huntington, though, isn't that right?
I don't know.
Oh, first
What?
bashing going on. That's interesting. It took us 36 minutes.
I've been pretty
36
good.
minutes. Pretty
Yeah.
good. Pretty good. I'd add something else that can move the needle. Just agree with all the points here, but I'll add just an upfront customer experience improvement. We've all done a lot in terms of being able to take applications, but something we're pretty notorious for in the mortgage business is having a really broad range of products, really detailed products, things some industries would describe as one product, we may call 50 or 60 products with all the complex pricing and parameters that go along with them. And so to the degree that we can introduce more and more tools to help customers understand what those options are, especially when they're beyond plain vanilla flavors or they're specialty products and community offerings with different price points and different benefits, providing more of those loan comparison tools and features up front is something that I think a lot of folks are working on and really trying to improve capabilities around that'll make a difference for customers.
That's great because the consumer could then pre-select and help your consultants ahead of time. And actually, as we think about some of the things that you mentioned on introducing data earlier in the process, certain elements of title data from our title business can actually drive those processes. So if we can empower those in point of sale and also in those loan selection criteria, you can get well qualified, well decisioned borrowers earlier into the process. That'd be valuable.
Yeah. You could present a more accurate picture of the fees in addition to the rates that we're quoting. You could really give a lot more robust picture of what to choose from, and then drive really good conversations when you do bring in that people component and start talking maybe with a loan officer. You've got a really good basis of information to talk about options.
So let's talk about that a little bit more. What is the least digitized portion of your process that would move the needle most if you could change it?
I started talking about loan conditions earlier in the day, and I know my team would be disappointed if they didn't get to hear me talk about loan conditions again today, because it's part of a lot of conversations. But you know, assigning loan conditions and clearing loan conditions broadly throughout the process is what takes so much of the time from beginning to end of a process, and what isn't as digitized as a lot of other parts. It's making decisions about what we're going to accept for loan conditions and what we can't and why. So I feel like introducing more digitization there would be a material game changer. Just not only in how we gather and decision those conditions, but how we even talk about them and describe them throughout the process, the entire loan conditions process.
I think that's a very good point. I think clearing loan conditions is challenging because we still have underwriters involved in the process, some of whom may be more conservative than others. So that inconsistency leads to challenges in the process flow that are reflected by conditions that way. And then we also have some conditions that appear more as process issues than true credit conditions. And making that a little bit easier for everybody will speed things up. I think the one other area that's of concern is we think of process in a linear fashion, and we think of process in a way that certain activities are performed at certain times, and then there's this waiting in between the activities. Reducing the waiting and doing some activities concurrently would certainly speed up the process, but that's much easier said than done because of the role clarity of the colleagues involved, the communication with the customer as to where exactly it is. But some things can happen, maybe not a ton, but even if some do, then that waiting time between process functions can get reduced, and the overall process can get sped up quite a bit.
Well, I want to give you the opportunity to jump in. What do you think you would change?
Fundamentally, it's paper. I think we've got to take paper out of our mortgage processes, and we feel like the opportunity to use electronic documents and really move towards the true digital mortgage exists. And so, we're focused on ways to help lenders move down that path. We recognize that you're not going to eliminate all the paper, but whether it be a full electronic loan closing package, partially electronic package, we can help with those things, whether it be electronic signing, remote online notarization, and electronic recording of those documents. All of those things are possible in various parts or portions of the process, and we're focused on taking paper out fundamentally.
Do you think there's still a lot of paper, Paul, from the appraisal side, or where do you think the paper, when you make a comment like that, is coming from?
I think there still is a lot of paper on the appraisal side, Jay. Now we have a new MISMO format or for a data set that is going to further transform what is previously known as the appraisal forms. And even traditional appraisals are going to become a defined data set. And we're not going to be even thinking about forms anymore in the not too distant future. But just what the GSEs have done with the property inspection process has eliminated a ton of paper. And where we want to do is help more lenders embrace that to take paper out of the process. And I say paper, I'm talking about even PDFs are part of what I consider to be paper. Um, and then, of course, the loan closing packages is the most paper intensive part of the process. I think the title insurance industry has historically been a paper based industry, but they've even now progressed beyond where many lenders are in their openness to use digital processes, use e reporting, use digital closing, offer electronic policies. So I think the further we can get lenders down the path of recognizing that paper is the enemy, the more impact we can have on the consumer experience.
Now, my next question is, I think, a tough one, but I'm interested to hear what you all have to say. Do you think a fully digitized mortgage process is possible? And if so, when do you think we'll get there?
It's
Um,
definitely possible. And I think Paul just outlined some of the pieces and parts that are available and that are in use today. So it's certainly possible. And the crux of the question probably is, when is widespread adoption going to take place, or will widespread adoption take place? And my sense is that that may be a slow moving target, depending on the level of value that all the different participants in the process find, right? Coming to adoption. Really valuing it is what's going to drive people, lenders and other partners toward more implementation. So certainly, a matter of years for the wide range of spectrum that are out there. But there is some full digital mortgage activity happening today. We've done a little bit of it, and we'll move to do more of it. And I know that there are a lot of other lenders who have it very actively on their roadmap as well. Really coming back to what's valuable about it, what's valuable about it for the customer, and what's valuable about it for the lender and all the other participants in the transaction, and making sure that we're really optimizing for those things and what we're implementing is probably the key to speeding that adoption a little bit faster. Because certainly it's been a slow curve and probably will continue that way.
I agree with Carolyn that it is possible. There is no doubt. When we're going to be fully digitized, I always think there will be an exception path for people that don't want to be digitized. But when is 90% of the deals going to be electronic? Let's say it for lack of a definition. If we're there by 2026, I'd be pretty impressed. I think that would be incredibly fast. But there are people doing it today, and they're doing it on some of their transactions, not all. And that leads me to be confident that it can occur.
so I know I'm not nearly as old as Paul, but and I know how old-fashioned he is, and he likes his paper. But I do think that there are a lot of customers and a lot of organizations that are doing fully digital experiences now. The question is, how much is a lot of fully digital transactions? And I think it goes back to what Paul was saying earlier about distribution of experiences. Uh, I think there'll be, and as when we're talking about customer experiences, when at some point we have to realize all the experiences that they're getting and other internet uh, opportunities, their Amazon experiences, their all their other interactions, and they're slowly demanding that kind of service level in everything they do. So while it might be small now, it'll grow. I agree with Paul. It's not going to get to 90% by 2026, but for somebody who manages a mortgage department, what I would encourage them to think about is, if you had a fully digital experience and you offered your customer that kind of experience that you felt good about and it was lower cost, if you had lower cost on 5 or 10% of your loans, wouldn't it be worth it? And then if you could grow that over time to 30 or 40%, wouldn't it be worth it more? It doesn't have to be 90% for it to be an impactful item. And for a long time, I don't think it's going to exceed even 10%. So, but I think that's fine. I think that also is an imperative that If 10% of our customers say that they want that kind of an experience, we got to figure out how to build it for them and uh, meet their expectations because the number is only going to grow over time, and it does offer value. Um, if it was 1%, would we make it a priority? Probably not, but it's more than 1%. And Quicken and others have it. They don't have it in the numbers that they may say they do, but they have enough of it that it's material enough that we have to pay attention to that experience. Not everybody does Rocket Mortgage. Mortgage is not entirely automated for every customer, but it is an important offering that changes your cost structure and your customer experience for those clients who benefit from it.
For sure. I think you couple that with, the demographics here, and certainly we're in a market today that it's very difficult for younger people to be active participants in the mortgage market because of affordability, and that is going to change, and it's going to change in 2 to 3 years, and those folks are going to be demanding a process that is not what you and I grew up dealing with. 100-page paper closing package would make these people laugh out loud. They're used to ordering things from Amazon in the morning and having it showing up by 3 p.m. So we've got to think about the consumer, and if we don't, I'm afraid they're really going to go alternative routes. We can't create a better experience.
And I'd say our workforce is in the same situation, Paul, right? Our colleagues and our employees who are using our systems and who are delivering these processes are also the consumers of Amazon. And, they can check and see when their pizza has been baked and when it's in the car on the way to them. And the tools they use at work really need to be elevated to the experiences that they expect as well.
To tie a bow on this, what would you say to someone who says there's not tons of demand for this now? Why should we do this right now if numbers for the amount of actual digital closings or Ron closing specifically are low? What would you answer to them as like the reason to start moving forward?
Are they a competitor of mine? Because I would tell them, you are 100% correct. Don't change a thing. Stay on your track. But if they were a friend, I might tell them, uh, you got to start on the path, and you can find savings in certain isolated processes that are low impact and fairly easy to implement. And if you can do that, it's worth starting. But I don't think any banks in Ohio should really adopt a digital process. I think that would be bad for them, and they should just stop right now.
I think Jay's point about take advantage of the small savings, and demand will be there because the savings will help you in many ways. So take little pieces of the process and start moving down the road.
And it's a learning process. It's iterative. So you have to start somewhere and begin learning if you want ultimately to reach that end state. And a full end-to-end digital mortgage with all the pieces digital is very daunting, but some of these small pieces are not very daunting. And they're things you can gain experience with and really start to see an impact from, and then decide, are they valued at the level that you thought they would be, and what would be next on the list, and really working through it in small bites. Agree with that.
I would go back to the comment I made about our application. A lot of other organizations already have an internet app, but we did not. And within 2 weeks to get several hundred applications, could those customers have called us? Could they have gone into a branch? Possibly. But we wouldn't have gotten the process moving as quickly as we did without that tool. And that was a fairly low impact, easy introduction, and something that we thought was overdue. I think every organization can find opportunities like that to just get started, as Caroline explained.
I would say making the investment, it's really about being committed to the business. If you believe the business is moving this direction in the longer term to be competitive, which I do, I think a lot of folks here have certainly reflected that we do, then it's an investment in the continued ability to compete in the business that we all care so much about. And so those investments sometimes take time to learn, take time to iterate around, take time maybe even to pay off in some cases. But they're really important because this is how we're going to serve our customers, not just now, but over the really the long term, a long period of time. And being committed to doing that and upgrading, offering the tools and experiences that are needed to do it right is, um, you know, an important commitment.
And I think there's a good comment that just got dropped in the chat saying that this is something that can be expensive when you're offering a range of
Mhm.
different digital closings. What advice do you have in regards to investing in tech, but ensuring it's cost effective in a world of thin margins?
I think
Paul?
that's that question is really an important one on everybody's minds and looking at the investment time horizon for these things. But it's really about not just what technology are you adding, but what else are you doing differently as a result of using that technology? What else is going to change? If we keep all the cost structure the same as it always has been and we add more costs, we're really going to struggle. But if we look at adding that cost and think about what else can we do differently? What else does it offset? Where else are we gaining efficiency? And how do we innovate to drive the process in that direction in order to create those efficiencies where they're not necessarily really obvious? That's where we've got to get creative around doing that. And there are some tools that are definitely expensive that we really do need to think creatively to find offsets for those in order to make business cases. Because even though things are cool, shiny new experiences, we do all have to make business cases to make these investments happen. And some of them are easier than others. It's really about change and changing the way we think about the whole process rather than adding on top.
Yeah, I would say that that is a particularly difficult question to answer because it's unique to each organization. And I would uh, echo Carolyn's comments around process, and I would take a look at what you think is the clunkiest process in your organization and see if there's a solution to address that first. But I might also consider outsourced outsourced solutions that could be implemented piecemeal. So some of the things that Paul had mentioned around valuations and title, those are fairly easy to implement and can provide some benefits pretty quickly with minimal investment and can get the ball rolling. But only if you think about the process implications of what you're also buying there. But most of the work is done by a third party. So for a lot of organizations, that could be a plus. Uh, for other organizations, going through the challenges of installing a point of sale system, uh, while it is a huge project, that might end up being the highest value opportunity because it'll bring in applications in a way that the data can be passed into the LOS automatically and you can speed up your process materially. For others, it could just be as simple as starting to take income verification electronically. There are a wide range of opportunities, and I think a lot of your existing vendors would be more than happy to suggest two or three different ideas. The key is to spend enough time to vet them out and match them up against what really can drive value at your own organization.
I think that's well said. I think, the incremental approach rather than trying to do all your deals as e-closings, try to do just a segment, maybe as hybrid, as one other person in the chat mentioned, is a great way to go. I'd also look at your valuation process because we see so many opportunities to take cost out there. Those savings, whether they be in people or actual supplier or vendor cost savings, those dollars can be reallocated to creating a better consumer experience as well. So the valuation management software space is one that there's a lot of money being just disregarded that we think is important to consider.
Right. And we have about 2 minutes until we're at the top of the hour. So I want to give everybody the opportunity to close things out really briefly before we wrap up today.
I, I want to thank you, Allison, for leading us through some great questions. I thought this was a great discussion. If anybody has questions about anything we've talked about, I'm always available and open to talking about these things. I love the topics and love to help lenders with their processes. I want to thank Carolyn and Jay for joining. I thought their comments were outstanding. So thank you both.
And unfortunately, we are at the end of today's conversation. Paul, Carolyn, Jay, thank you so much for sharing all the information that you've gone through today. I wish we had another hour to continue the discussion, but unfortunately, we're out of time. So, to everybody who watched today, thank you for joining. This webinar was recorded. We will be putting it online. So, if you'd like to share the recording with somebody else, you will be available to do so. And once again, thank you for joining us today. We'll see you all again soon.